Hi, this is Tim Estes. Today I want to talk about Greece. I wish I had a bottle of Windex because Windex fixes everything, for those of you that remember the movie, My Big Fat Greek Wedding. Well, let's go ahead and jump right in and talk a little bit. Greece is in the news, and I'm sure you're wondering how it affects you and your portfolio. Frankly, I'm not very worried. Okay, there, I said it. I'm not very worried. First off, if Greece defaults, it's not going to be the first time. They have defaulted 5 times in their history. And I think the problem is when you have a socialist government and then you run it on other people's money, you eventually do run out of money. So that's what's happening here. You know, yes, Greece is playing a game of chicken with the creditors. They could go to default. They could leave the EU and the euro. But they need to come to terms with the fact that they spend more than they have revenue from taxes. I don't want you to get caught up in the doom and the gloom. Greece is not the biggest impact on our overall portfolio picture. This does not mean investors need to get out of the stock market. In the big scheme of things, this is a flash in the pan. You know, and it really shouldn't affect the stock market too much. Yeah, you're going to see a little frothiness, but it's not that big of a deal. What you need to know is that we don't have any bonds in Greece, and we have very little equity exposure in Greece. What we do have is high-quality investments in a globally diversified portfolio. And this is the reason we have a diversified portfolio, so that when we do have fluctuations like this, it lowers the risk. So the final thought, keep a level head, and your portfolio is designed with defaults and things like this in mind. And as always, if you have questions, call me. That's why I'm here. So until next time, keep living the abundant life.